Okay, let's begin. Today's lecture will be about market analysis, and we will also be discussing the readings, which I sent out earlier, and some of the earlier readings as well, in order to catch up. We will record that as a separate session of discussion and focus on the lecture during this hour. The topic, as I mentioned, is market analysis, lecture number 4. And we are in the first half of the course in terms of understanding the market, and the second half of the course is shaping the market. We've done an introduction and overview. We've delved into marketing strategy, the issues involved with customers and value, and today we are doing market analysis, which is related to customers and value, to look at this in more detail, and in particular, some quantitative methods of market analysis. So a quick review from the last lecture, where we discussed what is value, what are customers, and a little bit about the relationship between research and development and marketing, and integrating those into a company function. So first of all, value is, as we learned, customer defined. Everything is worth what the purchaser will pay for it. We talked about the difference between what is liked and what is good. And in particular, the first law of marketing: what you sell, the products and services, is not what customers buy. In other words, the utility and value. You may have a great product from your opinion, and you sell that, and what the customer is actually benefiting from may be quite different than what you believe you are selling. And we call that the first law of marketing. And the good example that we mentioned, a very stark example of this, was Lorenzo Zambrano, the owner of Cemex, the Mexican concrete cement factory. He put it very plainly: nobody wants to buy cement. They want to build a building or a house, a bridge, or a road. That is what they want. That is the utility and value to the customer, which is quite distinct from the product. Another thing we learned is that value is opaque. What is value for the customer, as Peter Drucker says, is anything but obvious. And we have a number of barriers to understanding what that value is. It's not so easy. And the other aspect is the first principle of customer research, to get into the mind of the customer. A Korean concept that we call nunchi. Nunchi is trying to imagine and do things that the other person may be thinking and what they may want. And the famous Mel Gibson movie, What Women Want, he's a marketing executive, and it's a comedy, and he starts to enter into the world of women, and it's quite funny, etc. But the central message is to get into the mind of the customer and to broaden that. So the other interesting thing is value is not an independent entity. Value depends on a context. And there are 3 dimensions of context. One is the end user. In other words, the value will depend on who the end user is. If you sell to a household, a housewife, or you sell to a salesperson, you sell to an executive, you sell to a nurse or a doctor, the end user will determine very much the context of that value. And then the end use situation: what are they doing that, using that for, in the home, in the hospital, in the office, in the studio, and so forth. So the end use situation is an important context. And then the overall environment that they live and work in. So this contextual aspect of value will become especially important when we discuss market analysis. And the context is very essential to the concept of customer segmentation. You just don't sell to human beings as an aggregate whole. You do customer segmentation. Good political campaigns, which are based on marketing, know this. A politician has several messages and knows that certain messages will appeal to different populations. Uh, their position on retirement benefits will be, of course, much more relevant to older people. Their position on childcare will be much more important to young families. Their position on the military draft, for example, may be of more interest to young men or families with the young men. So each of these marketing positions will be different in terms of customer segmentation, and that means the context. And then when we look at this third contextual value, the environment, is the critical importance of megatrends. And megatrends are trends that are actually not unpredictable. They're quite predictable. Megatrends are things like aging. I think, to be very honest, a megatrend was the risk of a pandemic. But we don't exactly know how the megatrends will play out. We did not know when the pandemic would occur, although it was pretty evident that something would happen. Uh, so SARS, MERS happened, and now we have COVID-19. We would call that a megatrend. And this megatrend concept relates to the environmental context. And that determines many aspects of marketing. So imagine, you have a great restaurant, and the restaurant has a great ambiance with lots of people together and sharing food, and you have a buffet and excellent food, good value. Uh, People can gather, people can talk, but in the context of this environment and this mega trend, that service, that product will not be marketable. So you should think about this, because if you look throughout history at great business people who have made billions of dollars and delivered tremendous value to society, so Microsoft, Apple, Facebook, um, all the oil companies, for example, they understood the mega trends just like everybody else understood the mega trends. These are not secrets by definition. Uh, I would call a trend maybe a secret that not all everybody knows, but a mega trend is right in your face, as it were. But those very successful business people understood not just that the mega trend is occurring, but were able to predict its implications and timing. So if we look at South Korea's response to the COVID epidemic, it has been regarded as a good response, but one key element of that was understanding that trend, being prepared for that trend, and maybe not perfectly, but at least able to address it. And so this market analysis and understanding, in particular, the environmental mega aspect is extremely important. So many people do market analysis based on their product, based on maybe a customer segment that they're familiar with in their world, and don't realize these broader issues. And so market analysis, uh, which is often interpreted as very focused, also needs to be very broad. So multi-dimensional aspects to value. So not just the functional value, but also the economic value and the emotional value. Emotional goals become extremely important. It's very easy for product managers, entrepreneurs, business people to focus on their product and the functional aspects. And this product is very effective. This product has so much memory, or has so much speed and so forth, but often it is the emotional aspects that drive the purchasing decisions, as exemplified by this car here, Mercedes-Benz, and you see so many expressions of power and influence through the soldiers and the guns and the crowds and so forth. But if you look at this, perhaps what seems to strike you as most emblematic of the power is the very fancy imported car. Um, and and it's interesting because in Korea, there's a lot of these cars that people use specifically to send a signal about their social status and so forth. So people would like to drive Mercedes, BMWs, even Korean cars are good. So they get the higher end Ekis or the Genesis and so forth. And the North Koreans realize this, and they realize that South Koreans are very focused on this sort of power play, if you will, even though it's not on a geopolitical sense. And so this serves a very specific emotional goal, political goal. So these emotional aspects. So if we think about the mega trends and the emotional dimension of it, and the loneliness that people feel, the alienation they feel with these social distancing, and in some countries worse than Korea, where you have severe lockdowns and so forth. There are opportunities to create value, to help people uh, based on those emotional needs. This is not about taking advantage of the epidemic, but understanding what people need and delivering on that. That's all what is marketing. A value often involves a trade-off, and the perceived worth of something is in relation to the total cost that customers pay for it. So people say, well, you know, this, it's very interesting. For example, I've written a novel, a book. You can find it on Amazon. It's called Waves. And it costs only $10, a little less than that, $9.95. And if I'm thinking about marketing that book and selling that book, I think to myself, you know, this is only a $10 book. It shouldn't be so difficult for people to buy that. It's not like buying a car. It's not like buying a house or any other big ticket item. But people might perceive the book as good, and they'd want to read it, and so that $10 translates into a lot of time to read it. It's not a short book. It's fairly substantive. Uh, and so that total cost is a major factor in the purchasing decision. So people don't just look at the $10, but they look beyond at this total cost. And this relates to actually buying decisions and motivation and methods of expanding that market. And a very important concept is friction in buying decisions. In other words, how easy is it to make a buying decision? Another concept that we introduced is value is relative. So we have various concepts of next best alternative. So this is the next best alternative. This is what the customer has today, some baseline value. This is the next best alternative. Your offering is supposed to give more value than the next best alternative. Another term for that is the best available substitute or equivalent. So if we think about my book, which is a long book, it's about, if you get it on Amazon, you'll see 880 pages, which is actually not exactly right. It's about 400 pages, and the other 400 are footnotes and a lot of additional detail that people can read. But you think about the next best alternative, maybe that takes 15 hours to read. So during that 15 hours, somebody can do something else. So the value that I offer has to be greater than 15 hours of somebody's time, and that's not $10. That's a lot, and so the value of the book has to be very high. And I believe it is, but that's not always so easy to, uh, to convey that information. That's essentially a marketing problem. So I have to compete with the 15 hours relaxing, 15 hours working, 15 hours sleeping, and so forth. So the best available substitute equivalent are competitors. So maybe somebody wants to spend 15 hours reading another book, but usually that's not the issue. I think people acknowledge the book is very special and so forth. So the alternative is not necessarily another book, but it could be some other uh, activities that they're already doing. And we call that the status quo. So in fact, when it comes to the selling decisions, value is very important, but also the ease of switching. So in my benefit, getting the book is quite easy. You just click on the Amazon, it's an ebook, and that's done. So ease of switching is actually not such a big issue. Uh, the value of the product is the big challenge in the case of my book. So that's very interesting marketing problem. So what I decided to do is, of course, a book has a cover, and it's very hard to express, what's in the book. So I've gotten a lot of reviews. So other people are commenting, about 20, 22 reviews. So that enhances the value of the product. Another thing that I've done is I've set up a Facebook group where I put in parts of the book and comments and the implications, and people see that there's lots of interesting things. And I've actually noticed that the sales of the book have increased as people perceive more of the value of the book. And communicating that value, trying to understand what is that value, what do people want, is a critical element of marketing. Now, we're going to talk about marketing, all these aspects of marketing more as the course progresses. And one might say, well, why do you want to create an impression of value when it's not there? In other words, the person doesn't have the value. Well, if somebody doesn't read my book, then they don't get the value of that book. And so I can't just assume they're going to immediately see that, and that would be incorrect. So communicating that value, seeing how you get above the status quo, the next best alternative, is a way of making that value real. It's so that's to the benefit of people. So that's a very important concept in marketing, to create value through the products and to deliver that value, and hopefully make society better that way. So finally, we have value as a mindset. The two separate mindsets are the customer value mindset, where we look at what the customer wants, and then the product mindset. So if I'm an author of this book, the product mindset would be, my own feeling about the book and make it as good as possible and all that, which I tried to do. But then when you're actually marketing the book, I highlighted here, what is the customer mindset? What do they want? Why do they read books? What do they hope to benefit from it? What makes them do other things other than reading books, and so forth. What's also very fascinating about the marketing decisions that I've made for this book, and I've been involved in marketing in other ways too, of course, but I'm giving a very specific example that's happening now, is this book has a lot of science, a lot of philosophy, and it's a very intense book. It's not, it reads like a thriller, some parts of it, but it's a very intense book that has a lot of values in it and a lot of science. And I perceived a mega trend with this COVID-19 that people are more realizing the importance of science, especially biomedical science, on their everyday lives. There's a real interest in knowledge in this area. People want to learn about it. They want to understand about it, because the alternative, quite frankly, if you don't understand about viruses, if you don't understand anything about biology or medicine, it can be extremely frightening. Just like something out there that can kill you immediately. If you don't know anything, that's extremely frightening. So I think there's a mega trend to a greater interest in understanding, learning science, and deeper values. We see this as a mega trend. People really questioning how important certain activities are. Now, that doesn't mean to say that the activities before the pandemic were not good or without value. For example, gathering in concerts or gathering in restaurants. I mean, that has happened for thousands of years. So that may certainly happen again once things come under control. But people are thinking also differently about their own personal circumstances and about what is valuable to them. So I found that mega trend has created an environment where my book becomes potentially more appreciated. And so the marketing of that, the combination of increasing awareness, increasing content on the Facebook group, and working with this mega trend is helping to increase that. So I'm thinking about what the customer is interested in. So when we think about the customer, though, there's not just a generic customer out there. We need to segment the customer into different groups, and there's a very logical reason for this. And that logical reason relates to this graph that's outlining demand as a function of price. Obviously, as the price goes up, the demand goes down, and as the price goes down, the demand goes up. So if we fix at a certain price point, we will get one part of the customer market. And if we fix at multiple price points, we will get additional revenue from different additional products. So one challenge to my book is I have one book. I don't have different versions and so forth. Although a friend of mine has translated it into Korean, so I'm interested in that Korean market. So it's not quite a price segmentation, but that would be a geographic segmentation. Another friend of mine has written a teleplay, so putting it as a TV series ultimately would be another way of customer segmentation. Again, not by price, but by channel segmentation. So we have a different channel. Some people like to watch movies. Some people like to read books. The book is available as an ebook. Some people want it as a print book. I don't have it available as a print book unless I create a special print run. So that I lose on that customer segment, which would be another channel segment. In general, we have price segments, and we can have mass segmentation, individual segments, niche or micro or individual segmentation. That would be the size of the segmentation. And then the types of customer segmentation. Price segmentation, as we mentioned, geographic, demographic, psychographic, and behavioral. And we can identify these customer segments from the top down, basically taking the whole world and then going down, and then identifying the customer segments from the bottom up, defining the ideal customer. So when it comes to my book, for example, I said, who is the ideal? What kind of people would read my book? And then define, where would they be geographically? So a friend of mine wrote, for example, that she's Russian, actually from Belarusia, and she said, oh, she thinks there would be a lot of Russian intellectuals that would be interested in the book. So people who are curious about the world, who like to think about things and like to integrate that with adventures and like music, that would be the ideal customer. And she told me there'd be a lot in Russia. So that would be kind of from the bottom up approach as opposed to top down. We gave the example of the Samsung versus Apple and the smartphones. And so the blue line is Samsung, the orange line is, the blue line is Apple, the orange line is Samsung. And you can see that Samsung market share has increased. And one of their strategies has been indeed to have multiple segments that are addressed, the lower price points, the higher price points, different geographies. So the Samsung Galaxy does not come out just in one model. In Korea it does, but there are also the wider ones and so forth. And then there's the Note. But in other countries, there's even more models. And Samsung sometimes has been criticized for having so many smartphone models. It makes the supply chain more difficult and can make it confusing to customers. But in the end, that strategy has directly used this concept of customer segmentation to expand in the market. Apple's philosophy, especially under Steve Jobs, was to be very simple. One phone, the iPhone. Eventually, they had two versions. I think it was the iPhone 6 or whatever. They decided to have two versions. I don't know exactly when, but even today, the iPhone does not have dozens or even hundreds of different models released at the same time to capture wide customer segmentation. And in fact, the segmentation concept in Apple has been to focus on the demographic that is wealthier, and so they can charge a higher price. So they don't want to have a very wide market segment. So in fact, their strategy is being implemented. Samsung's approach is we want to have a wider segment. We want to have all levels, socioeconomic levels in our customer segment. And to reach that, they have to spread out with many different models. So this is not exactly to say one is better than the other. So for example, Samsung has more market share, but Apple has generally been more profitable. So they sell less phones, but at higher prices and higher margins. So again, this is related to strategy. We talked about marketing strategy. So Apple and Samsung have different, very different marketing strategies that translates into different customer segmentation and different levels of success, market share, profitability, and so forth. So in relation to this customer-oriented marketing, there's the marketing-oriented company that responds to customer needs, designs products accordingly, and then there's the very production or technology-oriented company that produces the products based on what they are capable of and what their competitive advantage are. So a market-oriented company will do a lot of market research, market testing, customer focus, whereas a product-oriented company will be focused more on product research, product testing, and be a product focus. So this market research, what we're going to talk about in the lecture is the market analysis. So any questions? Once again, please make sure you enter your name into the chat room. I think we have most everybody here. Okay, let's continue with market analysis. We will do some definitions of market analysis. We will do the different dimensions of market analysis. We will talk more specifically about market research. And then lastly, we'll cover the issue of uncertainty in market analysis. We don't always know, we can't analyze purchasing decisions and market analysis to an infinite degree of precision. There will always be a certain uncertainty. So I want to spend a little time at the conclusion of this lecture on how we deal with that uncertainty. So definitions, dimensions, market research, and uncertainty. So some definitions, we'll talk about the definition of market analysis, the difference between market research and marketing research, the goals of market analysis. So what is the definition of market analysis? It examines the market demand in relation to prices and product offerings. So if you remember that demand curve that we showed for the customer segmentation, we had demand on the vertical axis and we had prices on the horizontal axis, and you have different levels of sales based on that. More sales for lower prices, less sales for higher prices. So how does that curve work? Uh, do we know the shape of that curve? How sensitive is it to price? And that curve, how does it relate to different dimensions of the market analysis, geographies? So that curve may be appropriate for Korea, but you may need a different curve with different sensitivity to price in other markets, Europe, Southeast Asia, and so forth. And then within those markets, the curve might be quite different for different populations and different demographics. So you use consumer demographics and buying habits to identify trends. In other words, that curve is also changing over time. And as I said, extremely important to understand the macro environment as well. So a key role, and this is a very interesting concept of market analysis, is to envision potential problems. Probably the most important skill to have as a marketing person, and specifically one involved in marketing analysis, is to envision the potential problems. This is not a, how should I say, easy role or a do-good role. You have to, if you're working in a market analysis department, you have to think what's wrong. What is, what is, what are the potential problems with this product? Most people, they think about marketing, they go into marketing, they think about all the good things. And they think about, oh, this is the greatest product, this has the greatest features, and let's just do a marketing plan to get it out there. Let's do a marketing communications, public relations, advertising, and so forth to get it out there. That's all useful, but that actually, the best way to approach this is not to look at the positive, but actually to look at the negative. So what are some of those negatives? Creating a product no one wants to buy. That's a big potential problem. Obsolescence, creating a product that basically technology or other trends have created as obsolete. And of course, profitability. Is this product just too expensive to produce that we can't create a price point for people to buy it? So when you're doing market analysis, to think of these negative things, uncomfortable as they may be, is a most powerful mindset to have. And then there's an important distinction between market analysis and industry analysis. So market analysis actually looks at the sales of a product or service within a market. The industry analysis would actually look at all the different competitors and other stakeholders and analyze the industry from a holistic business perspective as opposed to specific market analysis. Another distinction to be aware of is the difference between market research and marketing research. So market research is what the market analysis is, the market trends, the market size, the target market, the technical research, market segmentation, and then marketing research are the actual techniques used to do that. Advertising effectiveness, copy testing, so you put out one product A, you put out another product B, and you can see how people are responding to them. A brand attitude, concept testing, satisfaction scores. These are marketing research techniques to actually get the data. And then the overlap between them are competition, pricing, product attributes, demand estimation, demand forecasting, so forth. So market research is a little different than marketing research. So what is the goal of market analysis? The goal of market analysis is to determine the attractiveness of a market and to understand its evolving opportunities and threats. Remember the SWOT analysis that we did in marketing strategy as they relate to the strengths and weaknesses of the firm. So a very important part of market strategy, marketing strategy, will be market analysis. So marketing analysis has several dimensions. And as David Acker, a famous marketing professor, said, having great products is not enough. You need to make what customers will buy. So what are the dimensions of market analysis? Probably most important is the market size, current and future. So all of you have done entrepreneurial pitches, whether it be in a competition or to a venture capital firm, or as part of a class project. You do pitch your product, you'll always want to put in something about the market size. Particularly important, and this is a challenge, is the future market size, because people going to be investing in that business are, of course, interested in the current situation, but the investment will return based on the future situation. So current and future market size. Another very important concept will be, and related to that, is the market trends. And that will influence, of course, the future market size. As I wrote, as I mentioned with respect to my book, I think some of the market trends are people looking at more substantive forms of literature and spending their time, especially during this period of social distancing and lockdowns. Seeking experiences that they can have that otherwise, with a lack of travel and engagement, become very difficult. So more people reading more books, people playing instruments, musical instruments at home, self-development. These are kinds of market trends based on macro environmental issues. Then the market growth rate. So that's a little bit more specific. How is that market growing? Over what time? And the market profitability. Are there people actually selling products and services in this market who are able to actually deliver that value and charge enough to make a profit? What is the overall industry core cost structure? And very importantly, distribution channels. So it's not just the market and how many people can buy it, at what prices, and how's that growing, but how do we get it to them? How we get it to them is the distribution channels. Is it going to be online, offline, sales force? Are we going to, do we need to use intermediaries or brokers or other sorts of channel intermediaries? These are all questions that are part of market analysis. And can we change that potentially? And finally, key success factors. So if you're doing a market analysis in your marketing plan for the final course project, all of these factors and dimensions should be addressed. So we're going to go into each of these in turn in some level of detail. So market size, current and future, has several terms associated with it. You have the PAM, the potential available market. And that's the whole potential market that might be available. That will be much larger than the total available market. And the served addressable market is what you can actually sell to. And finally, the serviceable and obtainable market. So this SOM is typically the market that you can reasonably consider as your market. What can you actually address through your distribution channels, through what resources you have, For example, if you have a software product in Korea, but it's only in Korean, your potential available market is not going to be the global, market. It's going to be the Korean market. And then if you only put it on Android and not on iOS, your serviceable market is going to be, more limited as well. So these will be highly dependent on your product capabilities as well as your distribution channels. So an interesting distinction is the addressable market. This SAM is really the key thing, is a function of marketing. So if you can do really good marketing, this is the SAM is essentially your market. The sales will be a certain percentage of the marketing. And if you do really good sales, your SOM will approach the SAM. Now, if you can think of new ways to market, new channels, and improve the marketing, then your SAM, the served addressable market, can approach the total available market. So again, if you improve the market, if you improve the product further, which is related to the marketing, this total available market can get closer to the potential available market. So how do we address this whole market size? There are two approaches. One is the top-down approach, and the other one is the bottom-up approach. The top-down approach to the market size is the most common. So for example, you have something for the cell phone camera market, and you look at all the cell phones out there. The total available market would be the total cell phone market. And then the served available market, this would be the cell phones with cameras, since your product is only used in these cameras. So you just look at the whole market geographically, etc., and see what segments relate to your product and create your market size from there. The bottom-up approach to market size is to see what is your ideal consumer using your product, and then expand out from that ideal consumer. How many of those consumers are there out there? Where are they? And so forth. So the bottom-up approach is usually more difficult, but can tend to be more accurate. It's more focused on your actual ideal consumers. So your serviceable and obtainable market is actually the target market. It's a function of what you can market to and what you can sell to. Although ultimately investors may be interested in what these larger markets, because with improvement in your marketing, with improvement in your sales, you can achieve those. So in order to estimate the market size, what data sources would you use? Government data, trade association data, financial data from major players, customer surveys. Those are the major data points that you would use to estimate market size. So market trends are very important in estimating if that market is increasing and or decreasing. And you look at these through two basic dimensions: the socioeconomic indicators, so the demographics, are the populations increasing, what is happening to employment, what is happening to urban data, and income. These would be the purchasing power. What are the household incomes, labor income, revenues by businesses, other trends related to income. And then what is the demand? What are people spending money on? So obviously, what are the trends with macroeconomic trends with this pandemic? People spending less money on restaurants and airline travel. So these are the demographics, income, and consumer demand. And then on the economic side, we look at the sources of the demand, the sources of the supply, and then the overall macroeconomic trends. So these this is a good table of different factors involved in market trends. They will be important to varying degrees for different products or services. But these are some of the major points. So in terms of macroeconomic trends on the demographic side, population growth, employment, unemployment rate. On the income side, obviously, uh, corporate profits, disposable income, government revenues, GDP, and then on the consumer demand, economic projections, inflation, exports, imports, GDP. So in general, in addition to this graph, we have two external environments. The task environment is specifically related to your business. That would be the industry analysis, the competitive analysis, and then the market analysis, which focuses on the customers. That's then the general environment is these macroeconomic trends and demographic, economic, political, legal, regulatory, legislative, technological, sociocultural, and lifestyles and attitudes. And I commented on some of these trends in the context of this pandemic. Very important one is the technological trends. They influence a lot of aspects of modern day innovation and marketing. So when it comes to technology trends, we have typical adoption and diffusion, not just of technologies, but of products in general. So market growth rates can be anticipated by how this product is adopted over time. So there are different categories of people that will buy this product. You have the innovators, the early adopters, the early majority, the late majority, and the laggards, and they will buy at different rates. And your overall product delivery curve, if you will, is going to look like this, what we call a logistic curve. So we have different adopter categories. Diffusion of this product is the process by which innovation is communicated through certain channels over time among members of a social system. So all of these aspects, if we want to accelerate this curve, if we want to increase this curve in terms of market growth rate, we have to identify these four factors: the innovation itself, the product, how we communicate it. So how does something get viral? Do we use YouTube? Do we use word of mouth? Do we use K-pop advertising, whatever it may be? These are the communication channels over time and among members of a social system. So how do we identify the key opinion leaders, the key influencers, and so forth? So the adoption process over these communication channels takes various time, knowledge, persuasion, decision, implementation, confirmation. These are the adopted categories that then ensue as we described. So this is a little bit of a cartoon about market adoption. These are the innovators, the early adopters. This is a big chasm between the early adopters and the early majority. How do you get to something that's more mass market? The late majority, and then the laggards, where the enthusiasm for the product goes down. Another dimension, as we talked about, is market profitability. This profitability will have three factors. One is the pure marketing, your ability to reach and cost to serve your market. The other one is related to your total revenue of the current market. So how do we achieve as much as possible of that total revenue? And then from the bottom up, how much do people spend in that market? So these three factors come together, and the intersection of those will determine the market profitability. In other words, the market profitability would be much greater when the total revenue of the current market is very high. The market profitability is also greater if customers tend to spend more on that category, and your market profitability also higher if you don't have to spend a lot to reach a very wide market. As soon as people don't spend money on this market, or the market is not very large from a revenue perspective, or it's very costly to reach that market, then the opportunity size in terms of market profitability will go down. So when we look at the market profitability and the business profitability, we want to look at the value system that we described and all the dimensions of value to discover new business opportunities. And in order to create more value and improve the marketability, we want to do one of either two things: liberate existing value that's trapped. So that could be to create more efficient markets. Example is eBay. Make it easy to access, such as Amazon or Gap. Create more efficient systems, Federal Express, disrupt current pricing power. So that liberates trapped value. Another way to increase market profitability in terms of discovering new opportunities is introduce new value to the world. Customize offerings, extending reach, building community, enabling collaboration, introducing new functionality, expertise. And so either liberating existing value or introducing new value. So one of the key aspects to market profitability is to understand the cost structure in an industry. And you want to position yourself so that you can have the most value in that value chain and more easily take out that value. So we mentioned those three elements of value: how much people spend on the market, or what is the revenue of the market, how much people spend on it, and what are the costs related to that. So those three factors also relate to individual steps in what is called the value chain, to go from the initial materials ultimately to the final customer. And that value chain goes like this: inbound logistics, materials, operations; outbound logistics, marketing, sales, and service, and additional margin here. These particular parts of the value chain may not represent that market profitability opportunity, but other aspects out here at the service margin could. So one example of this, understanding this industry cost structure, is the whole concept of Amazon, which goes straight, in the case of vegetables, Amazon Fresh, straight from the farmer to the consumer. So all of these elements in the value chain get eliminated: logistics, warehousing, retail, where you have direct to consumer, from the farm to the consumer through Amazon Fresh. Distribution channels is a very important dimension in market analysis. So here are 4 distribution channels that we describe: manufacturer straight to the consumer, manufacturer via retailer to the consumer, manufacturer to a wholesaler to a retailer to consumer, and more complex intermediaries here. So a part of market analysis is not just to see the market size and the growth, but to understand that value chain, and in particular the distribution channels. So we have understanding the existing distribution channels, understanding the trends and emerging channels, and most importantly, the power structure of these channels. Who actually controls access to the consumer? Where is most of the value delivered in this distribution chain? Is there government regulations or geographical factors that determine whether one of these elements in the chain, one of these steps in the chain, is more powerful than the others? Looking at market analysis, key successful factors are the accessibility to essential, unique resources, the competence to reach economies of scale, very important, accessibility to channels of distribution, and accessibility to leading technology. So those are the dimensions of marketing research. We move now into market research and marketing research, and we'll talk about a number of factors. The micro versus the macro environment, very important, as I mentioned. The SWOT analysis, strengths, weaknesses, opportunities, and threats analysis, which applies to marketing strategy, but also applies specifically to market research. The microenvironment with Porter's 5 forces, the macro environment with PESTLE analysis, which will go over customer relationship management and various new trends. So if we want to understand this environment, we have the internal environment, the micro environment, and the macro environment. So a good market analysis will understand what is the near environment or the micro environment, what this firm can influence. So these are the suppliers, the customers, the competitors, intermediaries, and some politics, what the firm can influence. The far environment is what the firm necessarily responds to, and this includes government, technology, some publics, climate, exchange rates, foreign competition, interest rates, and culture. Now, it's very interesting when you look at this, it is distinguished between those elements which you can influence, which would be the microenvironment, the near environment, and those which you don't influence but respond to. If we look at the example of Uber, Uber is the ride-sharing service most of you are familiar with. It's created a product, an app that connects the drivers to the riders. That app actually is not necessarily a competitive advantage. There are other ride-sharing apps out there. In Southeast Asia, we have Grab. In the United States and other places, we have Lyft. And there are other ride-sharing apps out there. Uber has had a very interesting strategy that actually has helped it to become the leading one. And it's less about the app, but about how it controls the macro environment. So they did a strengths, opportunities, weaknesses, and threats analysis. And strengths, weaknesses, opportunities, and threats. And on the opportunities and threats, the external side, and the threats in particular, they said the biggest problem that we face is not the competition from the other apps, but government regulation. And in fact, as you know, Tada here in Korea was determined to be illegal and essentially going out of business. So Uber understood that in order to have a successful business, they needed to influence government. In other words, this far environment, which typically industries respond to, had to somehow be in the near environment. So a big function at Uber was, how do you influence the government? And most of their efforts, many of their resources went into influencing government in many different ways. So that was part of their marketing strategy, is actually how they defined the macro and micro environments and changed that. So as I mentioned, these strengths, weaknesses, opportunities, threats is a very important part of market analysis. You want to, again, look at your internal strengths and weaknesses, your external opportunities and threats. You have a matrix that you use your market analysis to identify what are going to be key factors in the market, such as government in the case of ride-sharing apps, that will be a threat. What are the key opportunities, and how can we expand the market analysis to take advantage of those? And how do our strengths and weaknesses relate to these opportunities and threats? So the microenvironment, which is the near environment, is highly dominated by your competitors, and as well as other elements. And Porter's 5 forces and his strategic framework, as I mentioned, he's a very famous business strategist. have five forces. One is the key one is the competitive rivalry. So part of market analysis is to understand those competition. The threat of new entry. So not just your competition, but new entrants coming in. So there are various factors that are related to that. The barriers to entry, what are your economies of scale, the cost benefits, if you're in the business for a long period of time, protections for technology, patents, and other barriers to entry. So threat of new entry. Another one of the micro environment is the supplier power. So you want to adjust the price, but if you can't influence your suppliers, then your ability to adjust the price and of course have a marketing strategy based on that is more limited. So do we have a lot of suppliers? Are there many similar products? Is there competition among the suppliers? Are they able to charge more? And this is a very interesting dimension in Korean business, is that in Korean business, the suppliers generally don't have a lot of power because, as you know, dominated by the chaebol, Samsung, LG, SK, Hyundai, and so forth. And there's less supplier power. And that creates a very different dynamic. It's good for exports, but it creates problems domestically. And then the buyer power. If you're selling to customers or large wholesalers or large retailers, what is their power that influences your ability to market? And market analysis involves the study of that as well. And then to think out of the box is threat of substitution, some cross-product substitution. You have your immediate competitors, you have the threat of new competitors, but you have other substitute products. So in the transportation industry, you have train, KTX, you have car, you have airplane, and you have bus. And you focus only on the airplanes and competitive rival are there, and then new low-cost entrants, supplier power, that might be the employees, the buyer power, the customer, and travel groups. But then you also need to think of substitution. If you creating your market and then KTX is much cheaper, then you need to account for that. So that's the microenvironment. We also have the macro environment. The macro environment can be summed up with this PESTLE analysis. It involves 6 factors: political factors, economic factors, social and cultural, technological, legal, and ecological. So political are all the services, infrastructure, tax policy, regulations, which can influence a lot of businesses. Obviously, for example, ride sharing. So in this PESTLE analysis with Uber, this took a very important part of it. The economic aspects of growth rate, inflation, labor cost, the business cycle. When do you enter new product? Where are you in the business cycle? Obviously, with the pandemic, this whole area has undergone a lot of change. Social and cultural, demography, more young people, more old people, aging of the population, educational trends, cultural norms, income distribution, wealth inequality, all of these factors play into the macro environment. And very important is technological. What are other emerging technologies? And legal aspects. And then finally, very importantly, especially with this era of climate change, is ecological and sustainable businesses. So people talk about, we have a sustainable product. And so they are establishing a marketing position that is clearly aware of this opportunity with ecological issues. Customer relation management is essentially the integration of marketing, sales, and orders and support. So market analysis doesn't just occur in a vacuum, separate from the actual implementation of that. And customer sale relationship management is an important part of that. We'll talk about this in more detail in a later lecture. So some new trends in market analysis: a shift from data collection to data analysis, shift from how do you think you will behave to I know how you behave. So observational research, more artificial intelligence, mobile market research methods, including QR codes, biometric market research techniques, prediction markets based on crowdsourcing, virtual shopping, live audience responses, online collaboration tools, social media market research, and as I mentioned, very important part of this is artificial intelligence. Last few slides, I want to conclude with uncertainty and market analysis. We'll talk about levels of uncertainty, strategic posture. So we have essentially 4 levels of uncertainty. This is a graph of the future, and one is the future is very clear, relatively clear. We have a signal forecast. This is the traditional strategy toolkit. For example, strategy against the low-cost airline entrant. When we have increasing uncertainty, we might have alternative futures. So maybe 3 here, 3 possible outcomes. And typically we use decision analysis, option valuation models, game theory. So it's a little bit more sophisticated in terms of the mathematics. There's several applications for this, and this is very commonly used, these alternate future graphs. So you do a market analysis, but you have possible alternate futures. When you have more uncertainty, you have a range of futures, possible range of outcomes, no specific scenarios. Latent demand research, technology forecasting, and scenario planning are key techniques in this. And then the last and most uncertain is true ambiguity, no basis to forecast the future, analogies and pattern recognition, nonlinear dynamic models. One example would be if you're entering the Russian market in 1992. Another ambiguity is a lot of market analysis happening now around the pandemic. When will it finish? Or when we'll be able to sell more or do more business? There's a lot of ambiguity. So this is a very important slide for our current times because there's a lot of uncertainty. So 3 basic strategic postures. One is to shape the future. The second is to adapt to the future. And the other one is to kind of reserve a right to play. So these are strategic postures related to uncertainty. So in other words, if the future is uncertain, well, let's shape it. Let's actually determine the future. This is kind of a big positive one. Play a leadership role, establishing how the industry operates. So it's very interesting. Korea last week announced a $170 million vaccine program. A lot of people sitting and waiting and saying, various labs doing vaccine research, and let's see how it plays out. Korean government decided, well, we're going to do a focused effort to establish a vaccine and help shape that future. The second option, as I said, is adapt to the future. So have a organizational structure that can be quick, agile, and flexible in addressing these changes. Don't get locked into a specific position. And then another one is just to wait and reserve the right to play, but this can be very challenging because once you enter, you could be too late, but the benefit is you avoid premature commitments. So some closing comments. This is a video. Let's see if it will show that prove that predicting the future is an inexact science. I think it will come up. Let's see if it comes up. These were predictions that didn't come out. These are were the quotes. The project will never be able to leave the atmosphere. Calculated one day we weighed just 1.5 tons. Nuclear powered vacuum tubes. So interestingly, Lord Kelvin once wrote that heavier than air flying machines are impossible. And he was a president of the Royal Society, very top physicist, inventor of the Kelvin temperature scale, among other things. And this is the Wright brothers. Obviously, we achieved airline travel and went to the moon. So next time, we will talk about technology and demand forecasting. So as I mentioned, in uncertainty, one of the biggest uncertain aspects is how to predict the future of technology and predict the future of demand. So that's it for today. It's now 10:20. Let's take a 10-minute break and we'll resume with some discussion of the reading at 10:30 and also questions about the lecture. So 10:30 we'll reconvene here for questions and discussion of the readings. So feel free to take a break.